video today, guys. Look, I just want to talk about this stock portfolio, okay? Let me fix all my stuff up and get situated. But I want to talk about this stock portfolio, guys. And if you can hear me, give me a thumbs up so I know you hear me okay. Now look, the S&P 500 to date is up a little over 7%. However, my individual stock portfolio is up over 23%. So I want to have this conversation today. And when I say 23%, I'm not talking theory necessarily, right? I'm talking about real money. My personal Schwab account is up 23%. So in this video, I'm going to reveal to you what my individual stock portfolio is, what I own, how much I own, what I bought, and why I bought it. Now, I want to say this up front, okay? I'm not bragging, and I'm not about to act like I have some magical formula, because I really don't have a magical formula, right? I didn't necessarily outsmart the market at this point. That's not, it's none of that, right? It's just that what I picked in the last year or so that the account has been open has went up a tremendous amount. And I want to share some of that information with you guys on this video so we all on the same page. Now, as you come in, do me a small favor, guys. Let me do this real quick. I got to do a couple things real quick here. Let's see. Give me a second here. Just a little bit of housekeeping. That's all I'm doing is a little bit of housekeeping. So just bear with me. Let me know what city you're coming from, what state, what county, what country, what hemisphere, what continent that you're sitting on. Let me know that as you come in, guys, so we can see how well represented we got the whole world here in this talk that we're going to have. So let's see what we got here. I'm only up 9% after 1 year. Voo. Smash the like button because I want to have this conversation, but I want to get some participation from you guys. Lakewood, Washington, Boca Raton, Florida, LA is in the house a couple of times. Jersey, Tennessee is here. East Orange, Jersey. Is East Orange like Queen Latifah or somebody? I don't know. Naughty by nature, maybe. Joanne, Jason, good to have you guys here. Thanks for checking us out. Georgia's in the house. KC Mo is in the house. Good to have you. Memphis 10, that's Shelby County for those that don't know. Australia's in the house. We got Iowa here. Appreciate you being here. So we got a lot of folks from all over the country. But I just got fortunate, guys, in the last 7 months or so with some solid moves, right? And I want to share those moves with you. No hype. This is no day trading. This is no Forex. If you do all those things, I'm not mad at you, but this is not really that video. This is really just talking about real strategy in the stock market, real discipline in the stock market, and, real results is what we're looking for. So that's what we're talking about. We want to talk about this, guys, and we want you to feel free to, drop some stuff in the chat section as well. Yes, we got Mrs. Moore in the house. Good to have you, Mrs. Moore. Thank you so much for being here, and thank you for helping me out there. Yes, hit that like button, guys. Share this video with folks that you know, folks that you think might be interested in investing in the stock market, because we're here to help as many people as possible. Miami Beach, Florida is in the house. So yeah, 23% is huge, huge. So listen. This is my plea to you. Get your pen, get your paper ready, or get your phone so you can take some notes, or whatever you take notes on your computer, whatever, because I want to give you my portfolio. I'm going to give you my individual stock portfolio. Let me also say this. I have a TSP that is a whole nother monster. I have a ETF index fund portfolio that's a monster. So this individual stock portfolio that I'm talking about on this video today is one that I just started about a year ago, a little over a year ago. And if you've been rocking with me, you might remember me talking about this about a year ago, saying, hey, I want to get this individual stock account rolling over Schwab, boom, boom, boom. So it's only a year old, and it's only got about almost $22,000 in it right now. but the return has been crazy. So, my portfolio is 23 stocks. That's what's in it. 23 individual stocks. A couple of them I just purchased recently, but most of them I've had since last year. Okay. Now, the total value of it, I'm just looking over here to make sure I got some stuff right over here. Just bear with me here, making sure I got some stuff right over here on my other screen that I'm working with here. So again, $22,000, and I want you to say, maybe see, I want you to look at my portfolio, look at my philosophy, look at my strategy, and say, okay, maybe what can I do to infuse some of this information into my own portfolio strategy in my own individual stocks, right? Let's see here. Somebody said, can I know Boise State is a good school? Somebody said, can I ask you, is BSU, Boise State, a good school? Man, I don't have a clue, but I know I have a big old red sweatshirt that has BSU on the front of it. It's from Boise State. I got it like 15 years ago. But anyway, appreciate you from Argentina. Buenos Aires. Good to have you here. All right, so here's the list. Let me just give you, no more fluff. Let me just give you the list, okay? The first, I'm going to give you all 23 stocks. You can write them down if you want, but this is in the stock portfolio that's done 23% return this year. And after I give you the list, I'm going to give you sort of what I have in the list, because the allocation is important, right? What percentage of this stock portfolio is in this stock and what percentage is, I'll give you that in a little bit, but I want you to stay tuned for that. So I'm just going to give you the rundown of the list of companies that I have and I bought them for strategic reasons. I can't go over every single one of them, because then I'd be here, for hours talking about every single individual stock. But I just want to give you all of them, and then give you a little bit about a few of them. But hopefully this will help you. And this is real. I wish I could show my screen, my Schwab screen, but I can't really show my screen. But on Schwab, there's a portfolio performance tab, right? You hit that portfolio performance, and it'll compare your portfolio to the S&P 500, to the Dow Jones, to the Russell 3000, whatever you want to compare it with. So when I compare this with those top ones, the S&P 500 is a little over 7% year to date. My portfolio is over 23% year to date. So here they are. First one is this, and I'll just go through I'll go through it by sectors. That might be better. So the first sector is, and I got to look them up because I can't memorize all that. So the first sector is consumer staples, right? Consumer staples, and I only have three, or maybe four, but Kava. Now, I'm not super duper huge on Kava. Kava if you don't know what Kava is a Mediterranean type of fast food restaurant where you can watch them make your stuff. And I like Kava. I like to eat at Kava. So there's many reasons why I chose Kava, but I added Kava to the portfolio last year. Kava, and if you have Kava, if you're in America, you might have heard of Kava, CAVA. It's like I say, fast food, Mediterranean. It's sort of similar to the second one I have in my portfolio, which is Chipotle, right? So, and I eat a lot of Chipotle, right? So these are ones that I eat. They're sort of fast food, but they're not really fast food. They're sort of like Kava's more Mexican, but Kava's more Mediterranean. I have both of those in the portfolio. I also have in my consumer staples, I've got number 3 is Coca-Cola. Got it for various reasons, right? Obviously, it's a staple, right? It's pay dividends, good returns, brand recognition is crazy with Coca-Cola. You can go almost anywhere in the world and pull out a Coca-Cola can, and everybody knows what it is. It has a certain moat that I like about Coca-Cola. So I got that one. Another one, as far as food, consumer staples, is natural grocers. You got your Whole Foods and you got your Strouds, and I like natural grocers, right? Lots of organic food. I shop there, right? Notice a theme, right? These are all places that I frequent. And I'm watching them as I frequent them as well, but I'm also watching their books. I'm watching their management and all that stuff. So fourth one I have is Colgate Palmolive. Now, Colgate Palmolive is a value stock, right? Um, Non-cyclical. Colgate Palmolive that sells the toothpaste and those type of things. No matter what happens, we still gonna be brushing our teeth probably more than like unless it's catastrophic, right? Right? If we sitting here like we on total recall, ducking underneath cars, and everybody is, stuff flying above us, and aliens popping out. Okay, if that's the case, we ain't brushing our teeth. But unless it gets to that level of catastrophic, we're going to be brushing our teeth. We're going to be taking care of our hygiene. So I like Colgate Palmolive because it's one of those staples. Anyway, I'm not going to go through each one like I said. Next one is Costco. I do own Costco. Solid. Procter and Gamble. I own Procter and Gamble. Solid. Symbol PG. Hey, get out your pens and pencils if you want to take notes on this stuff. I'm just kind of revealing and being transparent with what I own and what I have. Next one, I got a couple of them in the energy sector, and these are big boys in the energy sector in this portfolio that has gained 23% year to date. I got ExxonMobil and I got Chevron, both of them. Energy, value energy. They are a little cyclical, right? Price of oil gets changed. OPEC Plus does their thing, and next thing you know, supplies of oil go down, and so those can move up and can move down. Those two stocks, those energy stocks, but they're part really of my long-term hold in this particular portfolio. Again, what we're doing here, guys, is we're going through the entire 23 stock portfolio that has gained me over 23% returns this year, better than the S&P 500 that has only gained 7% return this year. So that's what we're talking about, right? Feel free to chime in and chat it up if you want. Let's keep going. In the transportation, well, let's go industrial. In the industrial, I got WM, ticker symbol WM, which is the company called Waste Management, right? Value company as well. I also have, in terms of transportation, I got Toyota and I got Canadian Pacific, the railroad. Now, the reason I got Toyota, look, I'm a Toyota guy. I just did a video a couple of videos ago talking about, hey, I've bought 17 used cars or 16 used cars over the years. About 6 or 7 of them things, probably 7 or 8 of them have been Toyotas. I'm a big fan of Toyota. And I like Toyota. It hasn't been the greatest stock in the last year to 3 year to 5 year, but I like the product. And so I like the product. I'm looking at their fundamentals. It ain't all horrible, although it could get better, but competition is flooding the market regularly. Just a big fan of Toyota for its long-term stability. Canadian Pacific, got that as well because I want some railway transportation, right? I want some railway transportation because I'll tell you a little more about that later. Okay, so CP, that's Canadian Pacific. Let me see, and I got a bunch more to serve up to you guys real quick. Let me do this. I got to do it early so I don't forget it. Shout out to the sponsor of today's live video, and that's Moo Moo. Where's my cell phone? If you've been rocking with me for a while, guys, you know that Moo Moo is one that I just really started looking at, and I really downloaded it 2 or 3 months ago. And man, I like digging into the fundamentals of these stocks that I'm talking about. And I like to see earnings. I like to see balance sheets, assets and liabilities. I like to see free cash flow, real numbers. Moo Moo is a solid platform that does that for me. I wanted to mention my channel sponsor on this video real quick up front, but they make Moo Moo it surprised me, to be honest with you, because I'm not a big app guy, right? But when I hooked up with Moo Moo and I downloaded the platform, I said, okay, this is real-time data. It's analyst ratings, it's earnings calendars, it's earnings reports, and to me, Moo Moo really has one of the cleanest layouts for breaking down company financials. So, one of the cleanest that I've seen. And I've got some of the big boys apps, right? But the video is sponsored by Moo Moo, one of the best investing platforms I've seen for people that are into research, right? If you're into research and you're new, it has an easy platform. I know a lot of people that watch this channel are kind of new to investing. So This is a good one to get to, guys. And if you're looking for a solid app, consider checking out Moo. I put their link in the description box below. Um, all the stuff that I preach about in terms of doing this research that I do on these stocks. Moo is solid. It's the right app, right? It's built for people really who care about solid data, solid data. But right now you get up to 60 free stocks if you put money into Moo. You get up to, so check that out, guys. I'm not going to go too deep into that, but you know the deal, right? I want to give them a shout out because they're really solid, and I don't do a lot of sponsorships on this channel. So if I do a sponsorship, it's one that I've looked into, right? So if you're trying to build your portfolio, take your game up a notch, look at Moo. Now let's get back to it. Okay, so where did I leave off at? Let's see. I left off at, let me see here. Okay, so in the portfolio, I left off, I think, at PG. No, I left off at Waste Management. No, Canadian Pacific. Now let's get to the rest. Now the rest of this portfolio is the piece that has really been huge for me in the last 7 months. So let's just list some of these. Tech. Where am I at on AI and tech in this portfolio that's brought me 23% returns this year? NVIDIA is in the portfolio. Broadcom is in the portfolio. Taiwan Semi, ticker symbol TSM, is in the portfolio. And the big boy is in the portfolio. Palantir, ticker symbol PLTR, is in the portfolio. This portfolio, right? Now, that's tech. Let's talk financials, because I talk financials and money all the time. It's what I know. So I put some financials in this portfolio as well. So one of them is Visa. Now listen, I'm not a huge credit card user, right? Flat out. If you watch this channel for a long time, you know I don't use a whole lot of credit cards for much of nothing. But I'm not mad at people who do use credit cards. If you use them to build assets and to get assets that are going up in value, cool. I'm all for that. Visa. I got Visa in the portfolio. I got PayPal. I've been a user of PayPal for 15 years, or maybe more than that. But PayPal is in the portfolio. I just picked up some Berkshire Hathaway B shares. Just picked up some B shares to add to the portfolio, really in the last couple months. I also have, and that's ticker symbol BRK/B, by the way. I also have some Brookfield. Now I'm not going to go into what Brookfield is, but they buy assets all around the world. I got some Brookfield Corporation and I got some Brookfield Asset Management. That's ticker symbol BN and BAM. Both of those are in this portfolio. I also, going back to a little tech, I got Serve Robotics in here, and I got SoFi in here as well. So that portfolio right there, I think I named off 23 of them. If I was any of them short, let me know. But that portfolio right there is a winner chicken dinner. Let me see what else, if I missed anything. Nah, I hit it all. Yep, that's what I got in this portfolio. That's the portfolio that has returned 23% year to date. No joke, no fluff, just grabbing value-based, good, solid, some tech in their portfolios. Now, how did I get this big return? Let me just talk about that a little bit, because allocation is important. I just can't say I got all those because I don't have all those stocks in equal weight, right? I got a lot of some, and a little bit of others. So one of the biggest winners that I've had, guys, is NVIDIA, obviously. Let's keep it 100, right? NVIDIA is up like 60, 61, 62% this year so far. And NVIDIA makes up about 27% of this portfolio. Now, if you followed the channel for any amount of time, you know that a year ago, probably a year and a half ago, I was talking about NVIDIA. Man, this stock is looking good. Way before the split, this stock is looking crazy. Wow, this stock is really going. And I began to research, learn, and did probably 15, 20, 30 videos on this channel about NVIDIA. It makes up 27% of this portfolio. Now, Palantir. Now, Again, if you follow this channel about, I'm gonna say about 10 months ago, maybe a year ago, I was doing videos about Palantir saying, look, guys, could Palantir be the next NVIDIA, right? I probably did 8 or 9 videos about Palantir when it was trading at $18 per share, right? Crazy. So Palantir makes up 12% of this portfolio. So yes, 2 stocks is over 30% of the portfolio. Palantir, I think, is up more than 300% for the year, right? And then you look at stocks like SoFi, makes up maybe 6% of this portfolio. Serve Robotics, maybe 4.7, maybe 4.7, maybe close to 5% of this portfolio is Serve Robotics. So if you look at that, the reason I'm up 23% is I'm tech heavy as I started this portfolio. And what's been driving the market in the last 5, 6, 7, 10 years or more is technology. Now, when I was making the videos about NVIDIA and making the videos about Palantir, guess what? I wasn't just making the videos, I was buying the stock. I was buying the individual stock. So it's grown. It's grown a lot. Now, don't get me wrong. Broadcom, Visa, Natural Grocers, those things are in the portfolio also, and those things are up. And I think Taiwan Semi, those things are also up somewhere between 30 and 80% as well this year. So it's not just tech, but some of the other ones have gone up as well. But not to mention, most of this, I say most, I'm going to say about 40% of this 45% of this, maybe 40 to 50% of this portfolio is tech, right? It's heavy in the growth AI sector and tech innovation. And I do have a little bit of kind of moderate in this portfolio, moderate dividend exposure, right? And when I say dividend exposure, I'm talking about your Coca-Colas, your Procter & Gamble's, your Exxon Mobil's, your Chevron. Those are dividend providing stocks that are in this portfolio also. And of course, I always reinvest dividends, right? Put them right back into the portfolio. So the reasons this portfolio is up so high this year so far is because it's overweight in high flying tech like Palantir and NVIDIA and SoFi, right? And those things is what's driving and dominating the returns, the larger returns here this year. So I'm concentrating. And also, let's be real, I caught the Palantir explosion, right? I caught it in a wave. Right? I didn't get in there when Palantir was $80 per share, $90 per share. I got in there when Palantir was young, right? Young in terms of returns, right? So I rode the wave of Palantir, right? And in this portfolio, I was able, thankfully, to minimize my exposure to some of the small caps, right? That kind of brought that kind of weighed on the S&P 500 so far this year. Not a whole lot of international. I don't really invest in international things necessarily, because I believe that if you look at most of the companies I named, these 23 individual stocks that I named, they are worldwide companies already. So I don't have to go fishing over in India or go fishing over in Australia or go fishing over in Europe. You know, I mean, Toyota's worldwide. Brookfield is worldwide. NVIDIA and Palantir, they're worldwide, right? So the other thing is this. I didn't sell winners. I'm not a big seller, right? I like to buy and I like to hold. And so therefore, when I buy, I've done my thorough research, and I do really thorough research. I didn't buy these companies just, on a whim. Right? So those were good too. So, and I allocated most of the cash, by the way. I didn't hold on to a lot of cash, dropped in a money market. I'm not really playing the Warren Buffett game where I'm holding on to, a whole bunch of cash, waiting for the dip, right? I'm just kind of dollar cost averaging every single month. And this portfolio that was at zero a little over a year ago on this channel, we talked about it. It's now at almost $22,000 in this particular account. But now here's the deal. This has been my strategy thus far with these individual stocks. I play it much safer to the vest with my ETF index funds and my thrift savings plan. I play it a little closer to the vest, but my plan moving forward is to do a little shift with this particular stock portfolio. And my shift will mean I'm not going to be so heavy in tech, right? Moving forward, my philosophy is to sort of do a little shift. Now, here's the deal. I'm not going to sell these things. I'm going to keep what I have, and I'm going to anything I put in now, moving forward for the next 6 months to 12 months, is going to be a shift of away from adding to the individual stock. I'm sorry, adding to the tech stuff. I'm going to shift away from that and add more to the value stuff that's in the portfolio, right? Because really, guys, my overall philosophy and plan with this particular portfolio is to really be a little more disciplined in terms of value investing and be a little, I'm already rooted in the fundamentals, right? I focus on profitable companies, and I profit on and big companies too. This is not a small cap type. I'm not looking at these tiny little companies. I'm looking at big companies here that may be a little undervalued, but they have strong, here's the kicker. Now, this is a big one for me. Strong balance sheets. Assets versus liabilities, strong. So I want a company with good, solid, consistent earnings reports, right? And if you notice something, they have a moat. They have competitive advantage. If you look at something like Visa, right? Visa has a competitive advantage over Discover Card and over MasterCard in their niche, right? Or you look at something like on the portfolio, something like I don't know, let's call it NVIDIA. Obviously, NVIDIA has a strong, solid moat in the AI space. Not just the AI space and the semiconductors, but also in the data center space, right? Costco has a strong, solid base. It's membership style of revenue, right? Having, pay you 30, 40, 50, whatever it is, pay you dollars to be a member. That's a strong moat over some others that are out there. And I like that in companies, right? So for me, the other thing is that I sort of prioritize minimizing my risk. And one of the ways I do that is some of the things I mentioned, but also by buying strong companies, right? Let me check something out here, see what you guys are talking about in the chat, man, because I just been sort of ignoring the chat. I didn't mean to ignore the chat, but let me look at it up here. It's easy to look at. Somebody says, hey, my first live. Good to have you here, Paradox. Been watching you for a while now. Appreciate you. Appreciate your support. And I do come on here live every now and then, just have a regular conversation. Somebody said, walking newbies through the stock market, how to set up and navigate a Schwab account. Hey, that's a good idea. I appreciate that. I put that in my notes. Let's see. What about Midcaps? Not a huge fan of Midcaps. I like big boys because I'm so nervous and scared. So I like the big boys. Let's see. Are there any stocks I focus on? It's a good question. Investing with Rod. Any stocks I'm focusing on as I make that shift from tech, and I'm not shifting totally from tech. I'm just sort of shifting my focus from tech, right? And that doesn't mean I'm getting rid of tech, right? I'm holding on to tech long term. I'm holding on to my Palantir and my SoFi and so forth. But as I shift away, I want to balance out the portfolio and bring it back to my original philosophy is a little more value driven as opposed to growth driven, right? So I'm going to be shifting away from the NVIDIAs and the SERVs and the SoFis and the Broadcoms. I'm not going to be putting so much money in those, and I'm going to be moving more towards some of those. And I don't want to buy any more at this point. I'll look at buying. Honestly, I'm going to look at adding one or two to the portfolio a year. Yeah, you heard that right, guys. A year. I am not trying to blow this thing up fast. I'm not here to get rich quick. I'm not here to try to make a fast buck. I'm not here to catch some fantastic wave, but if I catch a wave, I'm cool with that. But some of the things on my watch list is your JP Morgan Chase. Read a story about 6 months ago about how JP Morgan Chase, and if you pay attention to major cities in the last 2 or 3 years, you've seen this already. JP Morgan Chase branches popping up in your major city where you can go into the store. See, 10 years ago, you didn't see a whole lot of, at least where I'm from, you didn't see a whole lot of JP Morgan Chases that you can walk into, you know. But nowadays, I see a bunch of them that I can walk into. And I read a story 6 months ago said JP Morgan was buying up a whole bunch of commercial real estate. And if JP Morgan's buying up a whole bunch of commercial real estate, that means they're going to be popping up more and more and more. So JP Morgan Chase is one that I'm looking at. I'm just throwing it out there. Thought about the Nike wave, right? Look, boom, boom. I thought about the Nike wave. I'm not sure about that. I said Nike wave, not microwave, but Nike wave, right? Another one on my watch list was Duke Energy. Another one on my watch list was Citigroup. Yes, I'm looking at Amazon as well, by the way. So I've got a few of them on my list, but I really want to pour back into the value companies that I have that are on my list already. And I'm talking about the natural grocers, the ticker symbol CL, Colgate Palmolive, the Costco, the Procter and Gamble's, the Exxon Mobil and Chevron's, the Waste Management's. I want to pour back into some of those companies that are not tech, but I already own. And that's sort of, so to hope that answer your question, if I'm looking at some things that I'm going to pour back into as I kind of shift away from tech. But the key is I'm not selling anything, right? I'm just taking new money and pouring it more into non-tech sectors, right? That's what I'm doing. So that's I want to make that really, really clear. It's because I've already built a solid, what I think is a solid core value foundation that I'm sticking with, right? And I don't want to have 30, 40, 50 stocks in my portfolio. That's too many for me to maintain. It's too much. I don't need that many, right? Because this is one portfolio. I still have an ETF index fund portfolio, and I still have a thrift savings plan portfolio. So this is sort of my, let's have some fun, but let's follow some fundamentals portfolio of individual stocks, right? So obviously I automate this thing. I'm just kind of looking at I'm looking at it there, but I'll look at it here. Any thoughts on defense sector? Defense sector is always good, right? Because, you know, as we enter a lot of turbulence around the world, right? Turbulence around the world, meaning the wars, the conflicts, the tariffs. We have the leader in America, President Donald Trump, is a little more feisty and fiery, and he can rub some people the wrong way. We know that. Like him, hate him, whatever you want to do. But because of that, there could be ongoing tension for the next several years with other countries. Ongoing tension obviously puts defense stocks at the forefront. So yeah, I'll be thinking about those as well. Can I do a video about how to properly rebalance the portfolio? Yeah, that would be a good video. I appreciate that suggestion, William. Thanks for bringing that up. That would be an excellent video, actually. Somebody said let's see, let me scroll back down here. Somebody said, where do I begin? Listen, you begin with education. You begin with learning. You begin with reading some books. Anything from John Bogle, the founder of Vanguard, would be a good place to start. J.L. Collins, The Simple Path to Wealth. Stocks 101. I forget who wrote that book. It was a CPA, a lady. I can't think of her name. But you just begin with knowledge, information, reading. And not just reading to read, but read to understand, and learning as much as possible is where you begin with this thing, right? You don't listen. Okay. Don't begin by taking other people's word for where you're going to put your money, right? You begin by learning, and that way you gain some knowledge to where you want to put. Where you put your money is too important to listen to Kramer and then take all his advice and go do it. It's more important than one article on Yahoo Money, right? So we want you to be thoroughly understanding what you're doing and just start learning, right? Put in the time and the effort to learn, and you'll be good, right? You'll make better decisions. Somebody said, do I like SCHD? I like SCHD. I don't own any SCHD at this point, but I certainly like SCHD. More of a dividend ETF, more so offered by Schwab, but you can find it on any portfolio. I like it. It's very cheap after they did that. I think it was a 50-to-1 split, what they did with SCHD just about 3 or 4 months ago. I think that was the split. Let's see here. Content. Let's see. I'll make sure I didn't miss anything. I'm going back a little bit. Let's see here. Any thoughts? Got that? So that the shift. Here's why I'm doing the shift. Okay. I want this portfolio to be a value-driven portfolio with some growth, not a growth-driven portfolio with some value, right? The way I've started the investing is it's growth, 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 growth. And I want to pull it back from that. So if I look at this portfolio in a year from now, I may not see those type of returns because now I put more money into the Coca-Colas and the natural grocers and the Exxon Mobils and the Chevrons and the waste managements. I put more money into those. But I'm also monitoring those companies' earnings reports. I may be a buy and hold person, but I'm not against getting rid of a stock if I see some problems with management, or if I see some problems with competition, or I see some problems with certain earnings, right? Or I see a problem with certain industries. If all of a sudden waste management is, on top of their industry, all of a sudden I see a competitor and I see a competitor doing some new, some innovative things, I'm not against saying, okay, maybe I need to move waste management. Maybe I need to get out of that industry or maybe get rid of that stock. I'm not against that. I'm just saying this is buy and hold for the most part, but it's also some flexibility built into this thing as well, right? I want to still enjoy the upside of tech, but I want to get the long-term value out of value stocks. So I'm not getting rid of my tech and I'm not stopping my total investing in tech. I'm just making a shift, right? I hope that makes any sense. So let me see what else we got here, guys. But that's my total stock portfolio. That's what we're doing right now, right? Let me just see if we got any questions in the chat, guys. If you got a question, let me know. Drop it in the chat, or you got a comment, drop it in the chat. All right. So somebody also mentioned earlier. They said, "What is something else you're looking at?" I'm also looking at Mastercard, right? I'm also looking at, and I'm looking at another energy, Dominion Energy as well, as Vistra, Vistra energy. I'm looking at some energy. I think right now in terms of allocation, I think the fact that I have consumer staples, I have energy. I only got really one industrial, but that may be cool. Um, I have transportation, and I also have some finances, some financial services with the PayPal and the Brookfield and the Berkshire Hathaway B, right? I'm in there a little bit, right? So I don't really necessarily want to go too heavy on financials, by the way, just as a heads up. Let me see something here, see what we got here. I don't know how that's not working, guys. Can't see any of the chats. What am I doing wrong? Somebody help me. How do you see the chats on this thing? I don't know. All right. Well, hey, listen. I don't want to hold you up, right? I don't want to hold you up on this beautiful Sunday. But let me go over here, see if I can see them better. Give me a second. Let's see something here. Bada bang. I don't mind staying on here chatting a little bit, taking a few questions, by the way, guys. Just as a heads up, I don't mind taking questions. I'm good with that. All right, let me see how I can get to the questions. I tell you, when you go on live, guys, and you're trying to look at the chat, it's so much going on here, man. It's like, wow, it's a lot going on over here. Okay. Let's try this. All right. Boom, there it is right there. Oh, better turn my volume down. All right, so let's see. Man, it came up nicely. Somebody said if I need an admin, let them know. I got an admin. I could always use one. You could always email me, and I could throw in another admin. That'd be cool. I don't mind that. Am I in any crypto? Good question. Okay, I got a tiny amount of crypto. I got probably around $1,000 worth of crypto, and that's mostly Ethereum, right? I'm not a big crypto guy, guys. Just being honest with you, not at this point. So I hope that helped you. Didn't help you, let me know. Somebody said you're not holding me up at all. Cool. My problem is the most interesting stocks are expensive, but I know there's a way to buy ETFs for cheaper. Yeah, nothing wrong with ETFs. If you're new to this game, I always suggest you go with ETFs over individual stocks. Individual stocks are much harder to predict. They're harder to buy. They're harder when to know when to sell. They take much more research than an ETF or index fund. ETFs, index funds, if you don't know, they're just a bucket of stocks, right? A bucket of 80 stocks or 150 or 300, 500 stocks, just a bucket. And they're a little more easier entry, right, into the stock game than individual stocks. The big problem with individual stocks, one of the big problems is not just what you pick, but it's when to get rid of what's going south. Most people don't really know when to get rid of them, right? They think they know when to get rid of them, but it's really a guessing game. So that's really the big piece with individual stocks. Where I always suggest new people think about ETFs and index funds first. Let's see here. Let's see here. I have MasterCard, no regrets. No doubt, no regrets for that. Let's see here. I dropped 10K on a crypto called Jasmy, JSMY. You better than me. I'm not dropping 10K on a crypto at this point. Let's see, getting out of debt but have zero idea how to invest or where to start. Start with education. Start with your job's 401k and get the match if you can. Then start with education. Learn as much as possible. Read, take notes, highlight, watch videos and take notes from videos that you watch and listen to podcasts. People who you trust, right? Somebody said, thanks for the live. Appreciate you. Hey, Smart My Brother, super happy to see you live with some stock talk. Hey, good to have you here, Brian. Good to have you back. I think I saw your name before because that's an odd or different way to spell Brian. So I think I've seen you before in here. Thank you so much for being here. Bitcoin is sound money, but don't know if the Genius Act is going to help. We'll see what happens with that. Somebody said I'm up 40% in my portfolio. Brian, congratulations. Let's see here. McDonald's. Not a bad play. Not a bad play at all. McDonald's is not a bad play. I'm not sure I like McDonald's. I don't eat at McDonald's. Now, I used to like them hot fudge sundaes. I'm going to keep it real with you, right? I used to like them hot fudge sundaes big time. Caramel or hot fudge. I mean, come on. Put a thumbs up in the chat if you know what I'm talking about. Them hot fudge sundaes was nice. Okay, but I don't really eat at McDonald's. I don't really frequent McDonald's. McDonald's is one of the largest holders of real estate in America, probably in the world. McDonald's is more of a real estate corporation than it is a food corporation. They own choice commercial real estate all throughout the world. So I'm not mad at McDonald's. McDonald's might be a good play, right? But at the same time, I don't really frequent or buy McDonald's. But I haven't done any research on McDonald's. But I must be real with you. Okay, so Pablo, he liked the hot fudge sundaes too. Okay, I appreciate that. Let's see here. I'm just running through the chat, right? Somebody said I might miss a few, so don't beat me up. VOO and QQQ, keep it simple while you're learning. I like that approach. Yeah, VOO is the S&P 500 ETF offered by Vanguard, and QQQ is that offered by State Street? But I think QQQ is just your heavy in tech. If you want to get a nice portion of tech in an ETF, QQQ is a good way to go. Is it QQQ? QQQ follows the NASDAQ 100, I think, which is still heavy tech, right? Let's see. Do I like options? Ms. B, I'm not sure about options, to be honest with you. I'm not against options, right? Puts and calls and all that. But matter of fact, I think in the next 6 months to a year, I'm probably going to learn a lot about options and do my research and really learn to trade options big time. And like I said before, I'm gonna probably have you guys come along with me on that journey, right? Just learning about them, because I don't trade options at this point. Let's see here, but I'm not against them. Okay, it says target date fund, a good place to start. Not bad, not a bad place to start. Knowing what a target date fund is, but also I like having a little more control of my money. Um, and a target date kind of moves money around for you, which is not a bad thing if you don't like dealing with all this stuff, right? Miami in the house, 100K in 3 years. You really helped me out. Don, congratulations to you. I appreciate that. Let's see. Are you invested? I must have missed one here. Let's see here. Um, what do I think about real estate stocks, REITs, and so forth? They're cool. Nothing wrong with that. Me personally, I have one REIT in ETF over in my ETF portfolio, but I also own physical real estate as well. So since I own physical real estate, I don't really play with it too much in my stock portfolios or my ETF portfolios. Again, I have one REIT, but I own physical real estate, and I like physical real estate a lot. Let's see here. Moves. Let's see here. I sold 90%. I'm just looking down here, guys. Let's see. My portfolio, 39.52%. Good for you. I don't know what APLD is. You got to give me what that is. I'm up 27% for the year. And guys, the reason when people ask me about individual stocks, I don't like to give just point blank individual stock advice because unless I've researched it, because individual stock requires that you research the stock, research the company, research the management, research the competitive advantage of the company, research the industry. And this is why I say if you're going to be a newbie out here investing, ETFs and index funds, keep it simple until you learn to evaluate individual stocks. You learn what earnings per share is, right? You learn what free cash flow is. You learn a little bit about how to look at an earnings report and read the notes and ascertain from the notes and the information what's happening with this company. Until you learn to do that, ETFs and index funds, that's why I don't like giving just individual stock advice, really. And I know there's a lot of guys out here that do that, guys and ladies that do that, but it's just not really something I like to do very often. Let's see, PLTR has served me well. No doubt, it served a lot of us well. Let's see, DeFi. DeFi was on my short list, guys. Haven't really dug into it like I want to yet. Let's see here. What are your current single stocks you're looking at? I just named a whole bunch of them. You got to rewind the video there at. And you notice in my stock portfolio, I don't have a lot of the Mag 7. I don't have individual Google. I don't have Amazon. I don't have the Alphabet. I don't have some of the big boys. I don't have Tesla. I don't have some of the big boys that are out there in my individual stock portfolio, right? I got Nvidia, like I said earlier, but I don't have some of the other big boys. Let's see here. That heat cut my walk a little short. Okay, cool. Somebody gave me a thumbs up. I think that was on my McDonald's Sundays comment. Let's see here. What do you think about sun energy sector? Ooh, the sun energy, and when you say sun, are you ticker symbol sun? I don't know if you're talking about Sunoco or what are you talking about, but some of the energy stocks that are focused on, alternative energy, the wind energy, sun energy, solar energy, they're going to suffer a little bit under this presidency. I can tell you that right now. That's for sure. They're going to suffer a little bit. Let's see here. I do have some dividend stocks and dividend ETFs, yes, but I always plug them back into. I don't collect my $30, $40, $50 or my $500 or $1,000 a month in dividends. I don't do that. Let's see here. We have to help each other. I'm sending the boom, boom, boom. I appreciate you sending young guys to the channel, absolutely, because I would consider my channel to be sort of a boring channel, but it's like a really I don't do this. Ain't Mr. Beast, right? Jumping off of canopies and stuff and all that type of stuff. And I'm not about stock market flash. I'm not about trying to get you rich quick. I'm just trying to get you. I'm trying to get you to get rich slow and to be patient and be consistent and do this thing the right way and minimize risk, right? Because I don't like a lot of risk. So you don't, like I said, you don't see me doing a lot of day trading and forex talk and crypto. And there's nothing wrong with those things. I'm not against those things. It's just that my style. I got to do on this YouTube channel. I got to do I got to do what fits me. I got to do what's authentic and genuine to me as a person. So I like to stay real to who I am, and if I can do that, it may seem a little boring to some people, but it's got results. Like if you look at, and I don't really share a lot about my personal where I come from, but it was, think about the worst part of a major city that you live in or you live near. That's where I'm from, right? And so, I've come a long way and been really blessed to do what I do, but I've done it slow and steady over the years with consistent good habits and consistent um, um, uh, things, right? Good decisions, right? Not perfect, not perfect, right? But because I don't claim to be perfect, I don't want to be perfect, but it's getting rich is boring, right? It can be boring if you do it right. Let's see. What do you think about it? Boom, boom, boom. Let me see. What is the one thing to know about? I just when I scrolled, I messed up that. Oh, what is the one thing to know about stocks when beginning? Go slow. Take your time. Be patient. Patient is one of the most incredible virtues you'll have, and don't invest emotionally. Get out of your feelings, right? Listen, if you have a feeling or an itch, take that to the boat somewhere, right? Go drop that on black or red somewhere. But you want to invest in the stock market intelligently, and that means logically, and that means without emotion. Don't get too high, don't get too low, don't get too hyped, don't get too arrogant. Let me give you an example. I forgot what the title. Oh, the title of this video is "I'm up 23% in 2025. Here's my entire stock portfolio." This video is not to be arrogant at all. This video is to show you thoroughly what I did, why I did it, how I did it, and what stocks I have that are in my individual stock portfolio that rose 23%. This is not about trying to be arrogant, because listen, I could say I got lucky, but I just got the luck of the draw. I picked up Palantir when it was about to explode, right? I went ahead and put a bunch into NVIDIA when I was doing videos about NVIDIA a year ago, right? Um, I have a very basic value-driven portfolio, but I'm no expert, right? I'm not the smartest person in the world. I'm not some big-time uh, picker of stocks. Not at all. Not one bit. So stay humble when you do well, right? Even keel. Don't get too hyped. Don't get too low. Just keep on being, dollar cost averaging and being steady. Make a few good decisions. You're going to mess up some too, but make a few good decisions. And I do it because I don't like a lot of risk. So to avoid a lot of risk, I do a lot of research, right? But it ain't me. I mean, anybody could have picked out these stocks. It's not a big deal, but stay humble. Man, I go on tangents when I answer some questions, so bear with me. Let's see here. Somebody posted their portfolio here a little bit. Let's see. You're not healthy. Let's see. You're not heavily dependent on the Mag 7. No, not heavily dependent on the Mag 7, because in my opinion, the Mag 7 has a lot of volatility to it. It's tech heavy, and because it's tech heavy nowadays, if you looked at the Big 7 20 years ago, it wasn't heavy. It wasn't tech heavy, right? But it's tech heavy now, and I understand the tech sector is volatile, meaning that it has a lot of highs and some lows too. But the tech sector is going up. Let's keep it real, right? The tech sector is going up. So I'm in there, but I'm cautiously in there, but I'm looking to pivot this portfolio as well. Somebody said Webull or Moo Moo. I'm a Moo Moo guy, man. That's what I've been using for the past several months, and I like it. I've never used Webull. Somebody said, I'm not greedy, just want to stop being in survival mode, maybe actually enjoy life. Listen, Jazzy, get you a plan, Jazzy. Get you a plan together, and you can do it. But it starts with organization, right? One of the reasons a lot of people feel like overwhelmed or like they don't have enough money is because they're not organized. Get really, really organized, because that makes you in control. And when you get in control, you can feel more at peace when you're in control, right? Because the feeling of being in control is what adds peace to your life. And you know how I know that? Because the feeling of being out of control brings on stress, right? So let's see what else you got. What do you think about casino game developers? Not a fan of that. Let's see here. Is a certain amount of money in your account that you can start to get a good momentum when building to the million? No, not a certain amount of money. You start, right? Just start. Start with nothing and keep going. Keep going, keep going. Don't stop. 30 years, 40 years, keep going. Let's see. At the stage you're in life, makes sense. Let's see. I do my budget monthly to a year out and adjust it as I go along. That's cool. Whatever floats your boat. I like to do mine monthly, a unique budget every month, because things come up. Let's see here. Seeing 23% clicked. I'm not mad at you. I went through my portfolio, and just to recap, man, should I recap this to help you guys out? Let me know. Should I recap let me know with a thumbs up if I should recap my list. Let me know with a thumbs up, and don't forget to like the video. Smash the like button for me. Let me see. Should I go ahead and recap? Yes or no? Somebody gave me a thumbs up. Is anybody else giving me a thumbs up? Okay, a few more. Should I recap all 23 things in my portfolio? Some people are saying yes, yes, yes. Okay, let me do a quick recap. And I got to pull up the list because I don't know them all by heart. But these things have been in my portfolio for most of them over a year. Okay, but this is the portfolio that has brought me 23% returns. And I'm going to break it down to you. I'm going to go faster this time. So get your pen and paper ready or take your notes real quick. This is the portfolio. And I'll just name the companies. You can look at the ticker symbols later. Chipotle, Kava, Coca-Cola, ticker symbol KO, Natural Grocers, Colgate-Palmolive, Costco, Procter and Gamble, a couple of energy stocks, ExxonMobil and Chevron. Also, I got some waste management, ticker symbol WM, industrial stock. That's a value stock. Also got transportation-wise, I got my favorite type of car of all time. I'm going to stand 10 toes down on it, Toyota. Ticker symbol TM. Toyota has not had a banner 3 years. I like to keep them around in my portfolio because I believe in their products. Canadian Pacific Railroad is in there. And then my tech stocks, which have been heavy for me. NVIDIA, Palantir, Taiwan Semi, Broadcom, and I also have some SoFi and some Serve Robotics in there. I have some Berkshire Hathaway, B, Class Share B. I also have some Brookfield Corporation, ticker symbol BN, and their asset management group, which is ticker symbol BAM. I got some Visa in there. I got some PayPal in there. And I think that's it. Did I mention Taiwan Semi? Yep, I did. That's the portfolio. I hope let me know if that helps you out, guys, giving you an idea. And now the thing to realize about that portfolio, again, I want to mention this since I just mentioned that. The thing I need you to understand is that a large chunk, about 50%, 40 or 50% of that portfolio is tech, right? 27% of that portfolio is NVIDIA. 12% of that portfolio is Palantir. SoFi is about 6% of that portfolio. I think Serve Robotics is close to 5%. And then you have others that have done well. Broadcom has done well. TSM, Taiwan Semi has done well. Visa has done well. Natural Grocers, surprisingly, has done really well. So understand the allocation in that portfolio as well. So if that helped you out, guys, give me a thumbs up. Let me know that was helpful for you, just to know what's in that portfolio. But that is it. That is the portfolio that has gotten me 27. Somebody said BN owns Westinghouse. BN is solid, man. If you're looking for something that's kind of off or different or odd, but it's also good value, check out Brookfield Corporation. Again, ticker symbol BN, and their asset management, ticker symbol BAM. You do your own research on them, though. Okay. Oh yeah, I made out big time with Palantir. Absolutely. Remember, I was doing videos about Palantir when they were trading at $18, $19 per share 9-10 months ago, right? Maybe a year ago or so, but maybe less than that. But I was doing videos about them last summer, and just a little bit beyond last summer. So yeah, huge. Matter of fact, I did 2 or 3 videos called "Is Palantir going to be the next Nvidia?" And lo and behold, look what happened to it. Hello. I'm not taking credit for that. I'm just telling you what I did. Um, is Robinhood good? I haven't checked the fundamentals of Robinhood. I'm not sure where they stand as a company. Not sure what their free cash flow looks like, what their balance sheet looks like. I don't know. So I don't want to get into what I know and don't know. Look into Cake. Is Cake Cheesecake Factory? Yeah, Cheesecake Factory. You do want to look into Cake. I think Cake is Cheesecake Factory. Matter of fact, Cheesecake Factory was on my board. Glad somebody brought that up. But yeah, Cheesecake Factory was on my board. And if you look at them year over year, Cheesecake Factory, a year ago today, Cheesecake Factory was trading at $39 per share. Today is trading at $62 per share. And I did a little bit of research into Cake Cheesecake Factory as well. So man, whoever brought that up in the chat, you right on the money. I don't know who did it, but if you brought that up in the chat, shout out to you. I'm trying to figure out who you are. Yeah, Brian brought that up. Good look, Brian. Cake was definitely on my short list about 6 months ago. I never did pull the trigger on them though, but they're still sitting there on my spreadsheet. Somebody also said, what do I think about Chipotle, CMG over the next year? It's a good question. Here's what I need from Chipotle. Let me tell you what I need from Chipotle. I need Chipotle to concentrate on their customer service and their cleanliness. The same way Chick-fil-A focuses on their customer services and cleanliness, I want to see that out of Chipotle, ticker symbol CMG. I like their growth over the last 10 years, but I'm not sure about their room for growth moving forward. We'll have to see and pay good close attention to their fundamentals and their earnings reports. But if I can get that, because you go into a Chipotle, it's like you don't know what you're going to get depending on what part of the town Chipotle is in. You go to your Chick-fil-A is like, phew, nice, my pleasure, right? That's what they say at Chick-fil-A, right? So I'm just saying, yeah, that's what I want to see out of Chipotle, because I'm watching all that when I'm visiting and frequenting these things. So listen, I'm not going to hold you up. I appreciate you guys being here more than you know, but I'm going to be honest with you. I'm up 23% in this stock portfolio in 2025. It is allocated and weighted more heavily towards tech, which I'm going to be changing and shifting that here shortly as I put more and more money into the value side of that portfolio as opposed to the tech side of that portfolio. If you got, and don't forget to check out my channel sponsor, Moo. There's a link to them in the description box below. Check them out as well. Also in the description box, you got your free 24 Laws of Money. It's a free ebook that I wrote. AI didn't write it, right? Chat GPT didn't write it. I wrote it. That's in the description box below as well. You got some other free things in the description box. You got access to smartmoneybro.com. Everybody watching this, do me a favor, go over to Instagram, look up Smart Money Bro, follow me on Instagram. I'm up to 4,000 subscribers on Instagram. Ooh, doesn't sound like much, I know, but I'm just a small guy out here trying to help as many people as possible. I do offer one-on-one financial mentoring and coaching. I have a Patreon group that you can join, and you can join our VIP over on Patreon and have a phone conversation with me one-on-one about your money. You can do that. Lots of ways to get in contact with me all over the internet, guys. If this was solid for you, make sure you hit the like button. Make sure you share the link to this video when it goes live so other people can get this real money talk, just real talk about finance, about the stock market, that is not all hyped up. It's not all get rich quick. It's not all loud. You know, I notice people that when they talk about the stock market, they talk fast and they talk loud. And I'm saying, we talking about my money. Slow down, bro, if you can, right? So this is just real talk with a real individual about stocks. Share the information with somebody you know. Drop me a comment below. Thank you for being here, Mrs. Moore. I appreciate you more than you know, Mrs. Moore. Maze, thank you. Don, thank you. Brian, thank you. Miss Sierra, I appreciate you. Miss Sierra said, you ever thought about writing a book? A book is coming. I got a Smart Money Bro book coming out. We're going to start talking about that. It's coming out in mid-August. It's going to be about money management. We also have some courses that are coming at a price that people can afford, not some crazy price that you got to, not pay rent this month so you can buy a course. We ain't doing all that, right? So we have a course coming, a flagship course that's going to anchor the whole Smart Money Bro brand. We have some mini courses coming out. We have a book coming out. All that stuff is coming. So stay tuned. Stay locked into this channel. We talk all things money, personal finance. We talk about investing. And we also talk about the big picture too, the economic side. Like I put a video out this morning talking about, capitalism versus socialism, basically. Check that video out as well. Appreciate you guys more than you know. Enjoy the rest of your weekend. And as I always say, the absolute best person who's going to take care of that old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.